Hi, everyone. Welcome to the current state of the stock market. This sign represents, I think, the trading environment we're in, where only the triple diamond skiers with great experience are able to survive a market like this. This is not a buy and hold kind of market. This is a very treacherous market. And to continue the video, please do click an ad, or for high resolution, click two ads. The auto detect on this video will detect and make the appropriate adjustments, so thank you. This was the big event of the day, of course, the Swiss National Bank announcing a tying into the euro and a peg effective immediately. And I actually didn't notice this until now, but it's sort of fascinating to me how prior to that announcement, there's a pretty substantial run-up in this. You kind of wonder who knew what and how it got leaked, but when the announcement was made, it took just a few milliseconds for this thing to explode higher. Those who happen to be long this did sensationally well, and those short, I imagine there were more than a few trading accounts blown up instantly on this. One of the reasons I don't really like trading the 100x leverage market like Forex and stopped years ago, this kind of thing can be deadly. Because 100x on an 8.8% move, ouch. But that was a big mover today, and it was a very strange day. And again, it goes back to the very treacherous nature of this market, because the bears had three big things on their side when the day began. One, the European drop in equities on Monday when we were closed. Two, the post-close on Friday lawsuit by the U.S. government against 17 different banks. And third, the weakness, tremendous weakness in crude oil. And naturally, when the market opened, the Dow was down like way over 250 points. And going back to the whole treacherous nature of this market, the last time we had a huge gap down, I was very short and rushed around like crazy covering positions and regretted it because they kept falling later to much greater profits. And I discussed that in a post yesterday. In retrospect today, running around covering things like mad would have been the right thing to do. Not that it wasn't a profitable day, it was, but the day ended with a fraction of the profits that were on the screen just a few minutes into the day. So, see, there's no easy answer. Do you cover everything? Do you cover half? Do you let it ride? I mean, one doesn't know. One thing I will say is that in the face of this big bounce, I did, as an earlier post today said, make a shift again into more of a split, which is just a drag because it's I much prefer kind of a pure portfolio, but this is a 25-75 split bull bear with a commitment level of about 80%. But as I'll show you, there is definitely some upside potential in the short to medium term, which really has to be taken into account. But I think if nothing else, today illustrates why it's not a great time to go all in for the short side, because that would have been painful. Let's back this up, and I'm going to walk you through really just a handful of index and ETF charts. So starting with a couple of NASDAQ items, the CompQ. And as you might guess, I mean, there's a lot of correlation these days, so this can be a very similar theme. On the CompQ, we've got a very important neckline here, which was touched back on the end of August, and I think is kind of the next logical target point, provided, and this is a huge asterisk, something totally weird doesn't happen tonight with the whole German court announcement. I believe it's 1 a.m. my time, Wednesday morning, that it's announced, I believe. If there's a surprise ruling, the euro could get completely crunched and we could wake up to another total pandemonium state, in which case I'd be ticked off to have any long positions, so you never know. The word on the street, the kind of feeling is that there's just no way that they're going to surprise anybody with a negative ruling. But anyway, huge asterisk, huge caveat there. Kindred spirit here, the NASDAQ 100 index. There is a substantial gap here that hasn't been filled at 2217.02. And I think that's a very sensible target for this one. Another big news item today. About the only thing going up was, for a while at least, was gold, and the gold miners had a good day all around. As I pointed out, the analog I had back with 2008 is basically null and void now. I've removed this little highlighted rectangle because it just doesn't apply. But we have broken out to a new lifetime high on the HUI and in turn the GDX. So good day for the miners. How about the Dow Jones Industrial, the NDO? This ended the day, it felt like a very bullish day actually, but we still ended down 100 on the Dow. And zooming into this one, I think we could get as high as, say, 11,860 or so on this, because all the indexes are showing this flag pattern with the I'm kind of tracing it out, it's not drawn, but here's the highs and the lows, and this needs to resolve somehow. This needs to resolve in one direction or another. I am banking pretty heavily on it resolving to the downside, and I really see these lurches higher like this, and like the one we'll probably see next as really new shorting opportunities. The mid-cap, dollar MID, another nice neckline there, which really has never been captured again. If we get a lot of strength, we could exceed the highs of August 31 and make all our way back to like 920 or so. That would be a pretty sensible target on this one. Dollar RUT, which actually was relatively strong today. We see here that we've got this first barrier, which again is the August 31 top, and then we could push on to about 770 if there's a lot of strength there. I think if we did get that, but if we got anywhere around that area, it would be a back up the truck type moment on the short side. But that's just the thing with this, up, down, up, down, up, down. There's new opportunities, but it can be quite frustrating if you're committed to any given direction. You've got to be nimble. SPX, same kind of duo of lines here. The first one back around 1232, and the next one up around the magical 1250 mark that we've been talking about so much, hasn't been reached yet. Very nice candlestick hammer right here, but let's face it, this is hardly a bottom. I mean, we've just dropped a couple of days, so it's not like we're at some massive multi-month important bottom here. It's just 2 days, for Pete's sake. So a lot of wiggling going on. Financials could indeed show a lot of strength if we do get a rally, because they've got pretty nice formation here that could push them even as high as like 100 on the security broker dealer index, dollar XBD. Now let's turn our attention to a couple of non-index items. First of all, interest rates. Dollar TNX. This really cracked to levels never been seen before, and so in turn, the bond ETF TLT to a never before seen high. It is astonishing when you think about how back here, this was the whole Greek Parliament bailout vote thing, where everybody's all hung up about. We've gone from 92 to like 115. I mean, what is that, 30% or something like that? And this is a bond fund. So it is absolutely astonishing what's happened to interest rates and what's happened to bonds between May and now, or June and now, whatever it was. It was just absolutely breathtaking what's gone on. I mentioned crude oil earlier. Let's take a look at the up-to-date futures graph on crude oil. Doesn't look much different than the index graph, although a better, this is a rather well-defined head and shoulders pattern. I think we've got a very, very well-defined neckline here at 90.73 on the October contract, and I would be watching an approach of that neckline for opportunities to short USO and some maybe oil service related stocks. Let's look at the big boys in the world of the equity futures. First, the ES. This one I have drawn the pattern that I mentioned before, and we've got this sort of flag that importantly was violated to the downside here. And I think this is the market tipping its hand that when it resolves, it's going to resolve to the downside. The question now, of course, is how high is this going to go between the German court, Bernanke on Thursday, Obama on Thursday night, the concerns about September 21 meeting, all of that. Could it get maybe to the midway point of this? Could it reach a new high within this pattern? Could it even get to the underside of this one? That's a lot of range. So, 1190 to 1260-ish, that's kind of the giant question mark. I really don't know how high it may go in that, which is exactly why I've acquired a lot of really beaten down longs that I think if there's a bounce, they'll bounce very, very sharply. In Q, relatively speaking, it's been showing more strength. It did not violate the underside of its pattern here, and it's really much closer to this topping area than the ES is. The ES, this pattern is well beneath that head and shoulders-ish type top. And finally, our friend gold, GLD. Not something I really participate in much. This has been a safe haven. And it started off very strong today and was very, very volatile, and actually closed down on the day, which I think a lot of people found very surprising. If equities are strong and if people sort of flow out of gold and TLT, which are almost one and the same these days, I do think there's downside risk here all the way back down to the low 160s. So there's a good 20 points of risk, which is equivalent of about $200 on the spot market for gold. So bottom line for me, lots of big news events this month, lots of up and down volatility, very dangerous to commit to a given direction. But the reason I titled the post, "Won't It Be Glorious?" is because there are a breathtaking number of great shorts if we get the right price. The market kind of has to go higher to make them attractive. If that happens, it could be the best shorting opportunity for at least the next year. I mean, it could be really, really good, but it's got to happen first. And if you're short now, as I am, sort of sweating that out could be kind of emotionally interesting. So anyway, that is it. And let's see what our friends in Germany say. And this is going to be a crazy week. So I think today is just going to be par for the course. See you later.